Yes, good day to you. Please, if you can see me very well, please type I can see you. I want to be sure everything is clear. Please just type I can see you if you know you can see me very well. And if you can also hear me very well, please type I can hear you so that we start trading of the day. If you can see me very well, like I said, please type I can see you. Okay. This is my chart, which I shall be sharing soon. We can see that this is just like a resistance and support section. And we saw that when the market came to this point, from this point went up, from this point came down, from this point went up, from this point came down. Like I told them yesterday, there is no actually any clear setup on gold for now. But prior to the ranging zone, if you can check what the market has been doing prior to the ranging zone, we will see that at this point, there was a break of structure here to the upside. You can see there was a break of structure to the upside. That was the break of structure we experienced to the outside at that section. And after that, we can see that there hasn't been any break of structure. Rather, when the market came here, it failed to swing high. It failed to swing high. It failed to swing high. However, we also need us to know that if the market comes below here, no more buyers for sale. But however, again, we should notice that since there was a failed swing here, the market failed since there was a higher low here, the market failed to actually swing up again. It failed to create, since there was this an higher low, it failed to create an higher high. Rather, it without creating an higher high, it created another lower high. So is gold in a downtrend presently? Well, I can't really conclude that. But we can see what we can see clearly that gold is ranging. And where is it ranging? It is actually ranging within a resistance and support zone. This is a resistance zone, and we don't want to trade because we could be trapped. And this is a support zone. This is what we are seeing in the day time frame. Let's go to the 4 hours time frame. If we go to the 4 hours time frame carefully, well, we might be able to see opportunities here. We might be able to see opportunities here. When the market, we can see that market came to respect this order block in the 4 hour time frame. This order block was respected. Let me remove this. This order block was respected in the what? In the lower time frame. What happened? The market came down. But prior to that, if we're to quickly read this chart well, we'll see that market has actually been coming up, coming up, coming up. But was there any break of structure this market created? Let's see. After this, let's see whether there was a break of structure the market created. No, it failed. It never created any break of structure. It never created any break of structure. But the only break of structure I can see from this 4 hour time frame, after the market created this break of structure here, it created another break of structure here. We need to read this thing very well. Created another break of structure at that point. It created another break of structure here, and from this point. But this initial break of structure that the market created on a 4-hour time frame. If we check it well, I can see this order block on the 4-hour time frame. We can see another block here. We can see an order block on the gold time frame. And we can see another block on the gold time frame, on the 4 hours time frame, I mean. Yes, this other block. You can see that in the 4-hour time frame. If that also be the case, we can also see that market as what market is doing presently, if we can see it based on the strategy we are using. I can also notice that there is a liquidity here, and I'm also noticing this fair value gap in the 4-hour time frame. I am noticing that fair value gap in the 4-hour time frame, because we just have to stick to our strategy. I am noticing that tiny fair value gap in the 4-hour time frame. I am noticing that tiny okay. Let's do a recap quickly. Do you understand how we got to this point? If you understand how we got to this point, please let me see your notification. I understand, so that I will proceed. Okay, a quick recap. Let me clear the screen finally. Now, we said for gold, this is gold. This is the gold market. Number one thing I want you to know in this business is that, number one, we just have to stick to our strategy. Stick to strategy that works. We have come to the day time frame. This is the day time frame. No, this is the day time frame. We can see the day time frame here. This is the day time frame. And from what you have been seeing, we have been seeing that the market has been trending. It has been not trending. The market has been consolidating for days. Anybody who is trying to take a meaningful trade with gold, probability of losing is high, because the market hasn't decided yet what it wants to do. And the best thing we can just do is to leave the market, let it breathe. Because whether you buy or sell, there's no clear direction here. So the best thing we just have to do is just to leave the market. Let the market decide what it wants to do. The market hasn't decided yet. I need you to know that for gold. I love trading gold. I just like it. Not because before I love trading gold because of its name, but now I just covered that I just like gold as on its own. I just like gold. Now, the last move we can see that gold had was, we saw there was a break of structure here to the upside on the daytime frame. There was a break of structure on the daytime frame. Good. Now, after the break of structure, we can see clearly that the market went up, higher low, but refused to create another higher high. Rather, it began to what? It began to what? Consolidate. Or we can just put it that after this higher high, this was the next higher low that gold. This was the lowest low it created. In a nutshell, gold has just been ranging. And because it has been ranging, we can see clearly that it has been ranging within a support and resistance. It has been ranging within a particular support and resistance. This is it. It has just been within support and resistance. Just within here. That's support and resistance. So it means in the day gold from here tapped into this resistance. Look at this resistance, respected this resistance. It failed to break out, came down, went to this resistance again, failed to break out, came down, went to this resistance again, fails to break out, come down. So something is about to happen to gold. Something is about to happen to gold, and we just need to keep a good eye on gold. Now, if you go to the 4-hour time frame, that will give us a better explanation. If we go to the 4-hour time frame, we will see that after this break of structure in the 4-hour time frame, after this break of structure in the 4-hour time frame, after this break of structure in the 4-hour time frame, if you check very well, this is the other block. This break of structure that you saw here that went up here, this is the other block that created the break of structure. This other block, and no, let's even take this is the point of interest. We can see this rejection block. We can see here. I'm talking of this rejection block. After this break of structure, we can see a point of interest here. You can see this rejection block. The market came, tapped into it. But the market had to go up, respect this resistance, tapped into it. Now, when the market tapped into it, we can see that not this, after the market tapped into this, after the market tapped into that, we can see that form another higher high. It has refused. So let us remove this. After the market tapped into this, it came, it went, reached here, and it has refused, and it came down again. And the market has actually refused to break structure up. So the best thing we can do at this point, even in the 4 hours time frame, the last thing we saw on the 4 hours time frame was that this was the last change of character that occurred. The last change of character that occurred on the 4 hour time frame, because when there was a break of structure here, to the downside, market came, formed a change of character here. So it means those who notice this move after the last break of structure, this was a protected eye. Market came to violate it. After this last break of structure, market came and did what? It came to violate it and form this external change of character. Like it is going up. So we expect that markets will come here. So even if we have to take trade here, we are not really seeing clearly, because even if you have to take trade on a 4 hour time frame, we are waiting for a clear break of structure. We haven't seen. Let us go to the 2 hours time frame. We are just looking for an entry point now. An entry point is what you are looking for in the 2 hour time frame. In the 2 hours time frame, after the change of character occurred, let's see. After the last change of character occurred on the 2 hours time frame, we saw a break of structure here. We saw another break of structure over there. We saw another break of structure over there. Then is this a valid break of structure? The next one on the 2 hour time frame. Another break of structure here again. Are you sure this is a break of structure? Yeah. Now this another break of structure we are seeing here again, which is fine. Now if this is a break of structure, this is the other block that created the break of structure. We are going somewhere. Now, if this is other block that created this break of structure in the 2-hour time frame, it means what we expect the market to do, tap into this break of structure, then we take a ride to this place. But as it is, we should also understand that why are we going to take this ride? We are going to see a change. We can see liquidity here. We can see fair value gap imbalance here. And in fact, market is actually already trying to market is already trying to feel, you see, it's already tapping into it gradually. But we need market to tap into this other block. Fine, we have identified this on the 2-hour time frame, but we still go further. Let's see what the 1 hour is saying. Remember, this is our order block. That is our order block. Remember, this is our order block. Let me remove this fair value gap because we are interested in taking order. 1 hour, if it can be a little bit more clearer. This is 1 hour, and you can see our break of structure is very clear, very valid on the 1 hour time frame. And we can see, if we need 1 hour time frame, it means this is our order block. We are looking at this order block in the 1 hour time frame, and we can see this is our fair value gap. We still want markets to consider coming. If you have to join this trade, that is the only condition we can join this trade. That is the only condition we can join this trade. And now we have seen that in the 1 hour time frame, a new order block has been created. This is our fair value gap. Let's what's happening in the 30 minutes. Now, still in 30 minutes, let's refine our order block very well. That is our order block. You see our order block standing there. After the video, you can actually download and rewatch. That's the beauty of using this platform. I don't need to be attaching any link. Fine, this is our order block. We can see internal range liquidity here. You can see imbalance here, which is fair value gap, another fair value gap, another fair value gap. Market must surely come here, feel it, then move. It must surely come. Now we have noticed this on the 30 minutes. Now, what is our entry point saying? What is 15 minutes saying? That is where we shall make the final decision. Now, what 15 minutes is showing, 15 minutes makes everything extremely clear. What is even clear that at this point now, we can see our liquidity sharp, extremely clean, clean, clean. This liquidity, we can see it's clean. So what is the final move we are waiting for? And we can see our liquidity clean. And at this point in 15 minutes, we can also see that this is our order block. This is our liquidity. That is our liquidity. Okay, and if that is our liquidity, so what are we waiting for? We are expecting for this move, and believe me, it's going to occur. We're expecting for a move around here. Then we will long and take our target profit here. So this is my projection for gold for now. This is our projection. Like I told them yesterday, since yesterday we have been waiting, we have been sitting back, but it's like we don't know when this move is going to happen, but we are waiting for it. And when it happens, we are going to take advantage of the situation. We are going to take advantage of whatever the market presents for us. This is a move we're anticipating. We're anticipating this move, and you see, this is a very, 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 very juicy trade. This is a very massive move. We are not going to sleep on this opportunity here. This is a very juicy trade. And how many pips are we looking at? How many pips from this trade from year to year? We are looking at, wow, this is much. Wow, this is much. 7,700 pips. Oh my God. Okay, okay. We should explain where liquidity. All right. Let me remove this. Let me do a brief recap again. Now, coming back from here, we said while we were teaching, we said our criteria for making an order block valid. We said number one, an order block must, number first thing was notice an order block is that what? We must see that previously before the order block, we see that the order block actually caused a break of structure. This is a recent break of structure here. This is a break of structure. And this is the other block that actually caused the break of structure. This is the other block that actually caused the break of structure. So that is the first thing we are seeing why this other block, why we cannot just close eyes, why we just have to consider this other block. That is the first stage. Number two, we said there must be another criteria is that we said the first criteria is that other block must cause a break of structure or a change of character. But this one in particular actually caused a break of structure. This is a break of structure is caused, and we can see it closed with the body of the candlestick. It closed with the body of this candlestick. That this is the other block. And number two criteria is said that we said there must be a fair value gap, which is internal range liquidity. If you consider well, that is our fair value gap. That is our fair value gap over there. That is the second criteria why we're also considering that position. That is our fair value gap. Now, I've understood that the third criteria is that there must be liquidity. There must be liquidity sweep inducement. I said liquidity sweep is an inducement. What is the inducement here? What is the deception here? There are so many traders that will come and still see and begin to tell you this is a break of structure. And because they saw that it is a break of structure, some will now come and begin to tell you this is a break of structure. As time goes on, when you are used to trading, you will really understand different types of liquidity. Some brothers will see this as break of structure, and before you know again, when they see that as break of structure, they will now tell you this is a good zone. They will not figure this out, this as an order block. They will begin to interpret the market wrongly. Remember when we're teaching us different types of inducement or liquidity inducement in the market, we said we have trend line liquidity, and we said above and below trend line there is money. So this is trend line liquidity, because somebody will have taken a trade here, buy, another person will have also, those who are trading with trend line will have also taken a trade here, buy. But we know that when they buy under this their buy, under this point is where going under this point they have stop loss. Under this point, we have stop loss. And what the market is going to do, market is coming to clear their stop loss, liquidate it, and before it will go up. So anytime you see a trend line, just be aware that there is what? Liquidity above or below it. But as long as we have an order block, we have a fair value gap, we are not going to fall for this trap. Some people have started buying here, believe me. Some people have started buying here. Some people have started buying here. When they now start buying there, they will not tell you this is where they want to take take their profits. Market has a way of inducing people to trap people down and make them lose their money. But because we have a strategy, we are disciplined, our strategy works, and we will wait until our strategy plays out 100%, is the reason why we will wait for the market to come down to this other block, test this liquid order block, and once it does that, then it will move. Some will not even wait for it to come to another block. Some might even say once the market reaches where this fair value gap is, some people can decide that, okay, I'm taking this trade immediately the market comes to the fair value gap, because gold actually respects fair value gap a lot. But we are saying At this point in time, we are waiting for the market to tap into this fair value gap, internal range liquidity or imbalance, tap this other block, then we will move. So this trend line liquidity is the third reason why we have to take this trade. And the good thing of it is this is a very juicy package. This is a very juicy package of over 7,000 plus, 7,000 plus. This is a very juicy package of over 7,000 pips, 7,000 pips. This is very juicy. 7,000. Wow. This is massive. All you just need to do, all we need to do now is to give us the coordinates. All we need to do is to take the coordinates. All we just need to do right now is to take our coordinates from this other block. All we need to do is to take our coordinates from this other block and then okay, looking at coordinates from this other block, we can see clearly. Let me remove our all right, what we can see clearly from here is that this is the coordinates, and if you can get this coordinate very well, please screenshot it, or I screenshot, I send it. This is the coordinates, and we are not supposed to. What is the coordinate here, sir? What is the coordinate? It means this is our entry point, 3355.46446. This is our entry point, 33554, 3355446. This is where our stop loss. Let's confirm the stop loss very well. Hold on. I will prefer our stop loss to, let's see if we should put our stop loss under here will be too much, but it's not too much for 7,000 pips. That is not too much. Let's adjust our stop loss a little below here. Fine. Let's put our stop loss a little below there, and remember the condition, we are not just buying here. But what if the market goes up, come back and do this? What will be the implication of that? Implication of that is that another break of structure has occurred. And if another break of structure has occurred, what if it happens like that? It comes, did not even tap here, breaks up. It means in the interim, another break of structure has occurred, and it means you might eventually consider this. But if the market is going, if it doesn't break structure up again, fine. But for now, I really think we just stick to what we have for now. But if it breaks structure, we are going to be taking order. We are going to take in trade from the immediate order block. Because why am I saying this? Because if you look at this well, after this immediate break of structure, what did the market do? Market just came to tap into this region. That was why the market came here. The market came here because of this order block. This is the fair value gap, and this was the inducement here. The criteria were fulfilled here. This is the order block. This was the order block. This is the inducement. This is the fair value gap. The market respected it and it tapped into here. So what if the same thing happens here now? What if it happens? We just as the market changes, have to. What if as it retraces down structure? What if that happens? What we are going to do is to what? come and wait for the other block that caused the break of structure, and we take our trade and we move. At this point, what I'm trying to say again is, if the market forms another break of structure here, all you just need to do is wait, look for the other block that is going to cause it around this region, then you will take your trade. But if the market doesn't cause a break of structure as we think, as we expect, if the market never caused a break of structure as we just expected, then it means, if the market doesn't cause another break of structure, it means we are going to respect this other block as it is. If it doesn't cause another break of structure, it means we are going to respect this other block and we are going to stick to this trade. We are going to stick to this trade. We are going to stick to this trade. But because of what we are saying here again, that's why we just have to be careful trading this gold. And because of what we are saying here now, if it breaks our let's use our stop loss. This is massive, honestly. This trade needs continuous audit. So let's just hope it gets here. But if it breaks this, if it takes our stop loss above, if it clears our stop loss down, that's why we must not trade. If it clears our stop loss, what that means is that market is coming to what? Is coming to fill this huge fair value gap. It means it's coming for that, and if it's coming for that, it means it is coming down. It is coming for this other block. It is coming for this. This is another other block here. But this one is pending for now because it is far. We should not worry about this for now. We only consider this if the market decides to clear our stop loss. We are not going to do anything. We will wait. We will let it clear this huge fair value gap. Then we'll let it tap into this other block and we move. So the risk we are going to take today, let me clear this. The risk we are going to take today is to see if the market, let us reduce this for now. You can watch it in your video again. You can watch it and watch in the video again. The risk we are, let me also clear this for now. Let me clear this for now. This is just what we are looking at for now. This is the only thing we want to see. This is the only thing we want to see for now. And this is even the 1 hour time frame. Let me go back to the 15 minutes time frame. In the 15 minutes time frame, let me do it proper. This is what we are expecting to see for now. This is the trade we are expecting to see for now. This is our expectation from the market. This is our expectation from the market. This is what we're expecting to see for now. So let me just quickly remember the coordinates. The entry point is 3356027. Our stop loss is 34. I'm coming. Yes, our stop loss is 3347157. Our entry point is 3356027, and our target profit is this. Our target profit. Let me set this entry point well. It has to be properly set. Our entry point is 3355448. Our stop loss is 3346578, and these and that is our target profit. Let me adjust our target profit proper, and I really want to delete this. I really want to clear this. I want my chart to be always neat. So this is what we are looking at for now. So let me just send the screenshot. Let's send the screenshot. Let's look at the screenshot. Like I said, our expectation before you send the screenshot is for the market to come down, tap into it, and go up. Let's get a screenshot of it. Let's get a screenshot of it. We just have to wait for gold. We just have to wait for gold to do what it actually wants to do. We are waiting for gold to do what it actually wants to do. Once gold does that, we just have to be patient. Since yesterday, we have been patient and we are still patient. Since yesterday, we are patient and we are still patient. Let me send to you. Please let me know if you have received the coordinates. Please let me know if you have received the coordinates. So that we can just analyze one more pair so that you can go to work, sir. Let me know if you have received the coordinates, please. I just send a screenshot to you. Good. Let's just take one more because of our time. Now, we shall be looking at that is for gold. That is for gold. Let's see what's happening with USD So it's not really my favorite pair. It used to be my favorite pair before, but not now. Not now. I'm refreshing. Let me go to JBP USD, GBP USD, GBP USD. And be mindful of the lot size you are going to use for gold. Gold is very volatile. Mindful of the lot size. Let's clear everything here. As usual, we said the first thing is to come to the daytime frame. I don't want this to be too long also. After this, I think we'll just... This is GBP USD. We are sticking to our strategy. Sticking to our strategy again. This is our order block. That is our break of structure. Another break of structure. Another break of structure to the upside. But after this break of structure here, we can see that we have a change of character down here. There is a market structure shift, meaning on the daytime frame, our bias has changed. And because we have a change of character here, we can see that the market came to respect this order block that caused the change of character. This is the order block. This is the order block that caused the change of character. I said the order block must be valid if it causes either a change of character or break of structure. Now, this is order block that caused change of character, meaning the market tapped into it and it started coming down. And after that, we saw a break of structure again. We saw a break of structure again. Now look at this break of structure. Where is the order block that caused this break of structure? Then we are going to change. We'll say this is now the order block that caused the break of structure. And what are we waiting for? Because the market has already shifted bias. Market has shifted bias already to the downtrend. So let's see how easy it is for the market to come and tap into this zone here, but that's going to be far. We can't wait for that because this is day time frame. So let's look at the 4 hour. This is what we can see for now in the day time frame, that there is an order block that actually caused this order block was what caused the break of structure. Let's see, because we may not be able to wait. We might just have to trade up. We might just, if you see opportunity, we might just have to trade up. We might just have to counter trade because it will take this to come and take position. Yeah, might just have to look for a way to trade against the trend intelligently so that we will not just be waiting for this. But it is clear to us that at this point the market is that. And I also want us to know that this particular break of structure we are seeing here, I need you to understand that this is the order block that actually caused this break of structure. So perhaps it might be, perhaps what I'm saying is that this is the liquidity that the market is trying to clear. Market is trying to clear liquidity here. It's trying to clear liquidity here. Let's see. And again, on the day time frame, but we are not trading with it. On the day time frame, if market clears this liquidity, comes here, remember this is another block on the day time frame. Let's not forget this is another block on the day time frame. This is analysis of the day time frame for now. So if there's any other block we are looking at, a bullish order block that will push the market up, it is this one here. But it is in a day time frame. We are not going to think about it for now. We are not going to think about it for now. But if it works, if it comes within a short time, we are going to embrace it. But now we are looking at what is happening in the immediate trend. What is happening in the immediate trend is that a change of character has occurred and it hasn't swept liquidity. So, but perhaps maybe the market will come and tap here, then clear here. We don't know yet. But what we're interested in, how can we take position and take something in the market? Let's go to the 4 hours. Good, perfect. Now this is the 4 hours. In the 4 hours, we can see clearly that this is the next break of structure here. That is the immediate break of structure in the 4 hours. That is the break of structure in the 4 hours. We can see this is a break of structure here. And we can also notice another break of structure here. Now, when the market, this is the break of structure, what caused this break of structure, this immediate break of structure here, we can see that if we check it well, there is another block here. So what does that mean? If that's another block, I am seeing liquidity sweep here again. I'm seeing liquidity here again. So good. So it means this might just be where the market is coming to, not here again. Because in a 4 hour time frame, the other block we can see here will no more be this. Because in the 4 hour time frame, where to refine this other block, it will definitely be this tiny one here. So we are not looking at that. But look at it. The market, this is the order block, immediate order block. This is the liquidity. So this is, even if we really want to sell and say we want to follow the market as it's coming down, we need to take care of this. We need to take note of this order block. But remember, the overall trend in the day time frame is that, what's the overall trend? This is the overall trend in the day time frame. This is far. The market in this is far. The overall trend in the old time frame for now we are seeing is that the market is bearish because a change of character has occurred down. In the 4 hour, we can still see that the market is what? Bearish. The market is still bearish in the 4 hour time frame. It's trying to come down, And we said this is other. So we are saying that if the market can come to these 4 hours with confirmation for us, if the market can come, we might even, once it taps into this, we might begin to sell. because we are seeing all our area of confluence playing out, because we can see a fair value gap here again, which is our criteria, sir. We can see a fair value gap here. We can see liquid inducement here. We can see other block. But let's see what 2 hours is telling us, because this extreme order block might be pending for now. Let's see what 2 hours is telling us. Now, what is 2 hours telling us? What is 2 hours telling us? 2 hours is telling us that what? This is the order block. This is the order block. Our liquidity is still here. Market is gradually pushing down. We can see it. Market is gradually coming here. Market is gradually pushing to this order block. In a 1 hour, let's see what 1 hour has for us. Almost the same thing, sir. In the 1 hour, the same thing again. So this order block, we are not to joke with it. Same thing in this order block. Same thing with this setup in 1 hour. Just once the market can clear it up properly, yes, we are seeing a bullish candlestick has already closed. We have seen one has already closed. Let's adjust this very well. No, it hasn't closed. So we just need the market to what? Come here. Now let's say 30 minutes. Let's go to 1 hour back, because we need to adjust our order block. Our order block in 1 hour. Let's see. Now in the 1 hour, our order block has to be refined. This will now be our order block in 1 hour. This is our order block in 1 hour. And if that's our order block in 1 hour, let's see 30 minutes. 30 minutes. 30 minutes. What is happening to 30 minutes? 30 minutes, this is our order block. This has become our order block. This candlestick here has become our order block, because we can see a tiny fair value gap here. Let's see. We can see a tiny fair value gap here. If you can see it with me, I want to be sure. I'm coming. You can see this tiny fair value gap here. I hope you can see it. So it makes our order block valid. All right, we have been able to map out that order block in 30 minutes. Good. Our setup still stays as it is. Then in 15 minutes, as we'll round up quickly, not to take much of your time, because we are going to the live market. In 15 minutes, let's get the order block clearly. In 15 minutes, this is the order block. The order block is this tiny stuff here is the order block. The only issue we might just have is if we miss the trade, that's all. But if we are watchful and we get it, so what is it that we are looking for as we conclude? We are looking for price to come and tap into it. But that is far. Tap into it, then we will now sell down. When we now sell down, we will now buy up again. So what we are expecting is we want, let me put it here. Now, if price eventually, good. If price eventually sell to this point now, which is far, fine. But I would suggest that if we can wait for price to, if we can be observant, there might be opportunity now. If there is a change, if there is a break of structure, depending on the candlestick, if there's going to be a break of structure, we notice it. Once a break of structure occurs, when we are able to look for the other block here, because break of structure has not occurred, so it's difficult for me to take a decision now. We can look for if break of structure occurs as it has, and we are able to find the other block. Nothing stops us from coming to trade somewhere, from coming to enter a trade here, then go up. Nothing stops us instead of waiting. So this might just be, like I said, if a break of structure happens here now, if this is a break of structure and it happens, we just need to come and look for the other block around here, then we enter. And when we enter, this will just be our target profit. But it's difficult to say that now because market has not given us a clear entry. It's just too difficult to say that now. Extremely difficult. Extremely difficult to just conclude that now. Very difficult. So we can wait for a break of structure here. Break of structure first. Because we already know it's going up. If it breaks up, fine. All we just need to do is to come back, look for the other block, enter. When we enter, then move. We go. So this is my position for it because here is still far. We cannot just look and let market just come and reach here. There must be an entry point for us. There must be an entry point for us. There must be. So this one, if we are going to take this trade, we just have to notice the break of structure. That's just the only way we can just notice. And how soon that one will happen, I don't know. It might happen during London session, probably between 7 to 8. I don't know. But this is what we need. This is just what we need. That's the only way we can enter very soon. And it has to be done done with patience later on. And if there's anything, please you let me know. Thank you very much, sir.